All right, guys, welcome back to Roxum TV and also welcome back to Gem Crypto. I hope you guys are having a fantastic day wherever you are. So Bitcoin essentially just bouncing off our resistance, our support level that we drew. Literally, we talk about the support level between 119K to 120K. And it's so nice to see how well TA works. We talk about the Bitcoin's price action, basically when it hit 126K all-time high, then we told the community and basically warned about the potential correction because the RSI was forming a little bit of bearish divergence. So congratulations if you guys were trading it. So of course, today, just like usual, we're going to start the show with a little bit of TA, with a little bit of Bitcoin charts analysis. We're also going to talk about some on-chain and why I think there's still room to grow despite we are well over 100K. Because I remember one of the tweet that CC tweet out I think a year ago or 2 years ago, quite some time ago. And he was like, soon enough, people would be complaining for Bitcoin just being 100K. And guess what? We are complaining about Bitcoin for being only 121K. So that's really something. It's very fascinating to see how much Bitcoin has achieved in just a matter of 16 years. So we're going to look into the on-chain analysis. We're also going to do a little bit more macro today because I realized I haven't dove deep into macro analysis for, I think, more than a week. So I do see some latest developments from different parts of the world, not just the US. So we're going to look at the data from some countries like New Zealand and also China, and of course, the US, right? So we're going to do macro and some good news from Gaza. So there's a ceasefire, though it's a little bit complicated because literally an hour before I started this live stream, Israel was flying bombs at Gaza again. So we're going to look into that. I don't always talk about geopolitics, but since that there's a major development, a major step forward, I kind of want to talk about because Bitcoin is becoming a macro asset anyway. So geopolitics actually affect Bitcoin quite a lot. And then we're also going to get into Coinbase because Coinbase, they are doing exciting things. They have an in-app DEX, like a DEX, decentralized exchange on the Coinbase app. So that's very exciting. As you know, I have been holding Coinbase, the stocks for quite some time. So for years, I'm extremely happy. And if you are an early watcher or early audience for Gem Crypto, you'll be extremely happy as well. So that's the flow for today's content. If this sounds good to you, make sure you smash up the like button and we will get started just right now. So of course, we always start with the hourly chart of Bitcoin. We're slowly going to build up the case from a short time frame to a longer time frame. So starting from the hour, I literally talk about the bear flag forming yesterday. The reason why I warned my community about this potential correction, and guess what? TA works as well. I love how TA is going to exactly the rectangle. You see this purple box that I drew days ago. So at 119K to 120K, so 120.6, something like that. So it is so nice to see Bitcoin getting right into this region, this level of support, and then we bounce back off. So we got to close to 122K. Right now, we're tracing a low at 121K. So let us dive deeper and let us zoom closer what's going on. So this bear flag, of course, is more like a bearish signal. That's why yesterday live stream, I warned my community about the correction. And this is not surprise at all. Bitcoin's just doing its thing. But it's nice to see once it's okay to touch this region, we basically just wick down okay, we closed inside this region, but we didn't like dip below. If we lose the support, then of course the next one that we have to watch very closely is 117K. So right here, the reason why is that, okay, prior resistance is going to be the future support that we have. But like right now, it's not like screaming that we're going to have like a even more intense correction. Just looking at the hourly chart that we are seeing on Bitcoin right now. But however, I do want to mention this like downtrend that has been playing out. So what I expect on the hourly, so on the short time frame, maybe in the coming hours or maybe in the coming days, but at least I'm seeing this like downtrend forming. So what I think it might happen in the coming hours is that we might be just like consolidating within this rectangle. And until we get like a confirmation whether we're going to break up or we're going to break down, we don't know yet. But like at least in the next few hours, it looks like we're just going to essentially like bounce off within this rectangle. So between 122K, or maybe we'll drop back down to like 120K, like within this region, basically, until we have confirmation that we have a hourly candle actually close above this downtrend line. Then yeah, I mean, it's more like a consolidation period to me. If we lose that, then again, if we lose this level of support, the next major support I'm eyeing is 117K. All right, so that's on the hourly chart. Let's also hop on to the daily chart right now. So we're slowly building things to like a bigger, a longer time frame. So support here is still intact. Again, the rectangle that we drew, let's go ahead and remove that bear flag because it's very confusing to watch. Okay, the support range is still intact. Again, on the daily chart, we're just like wicking down. So nothing screaming out to me being like too concerning, but in the coming hours, we might have some more consolidation, like basically within this rectangle, we're just like trading around, consolidating. So we have, okay, daily close actually above 120. So this region, that's actually a good sign. So Bitcoin is still in control in the daily. So what I'm seeing here is that, okay, today on the 10th of October, we haven't, okay, that's rubbish drawing. So we haven't closed this daily candle yet. What I want to see is that if we manage to stay above this like rectangle box, like stay above this support level, that is what I want to see. It shows like Bitcoin is still in control. Like if we close maybe inside these regions, so between 119 to 120, then it's a little bit of like showing a little bit of weakness. Maybe, okay, if this scenario takes place, then we're going to go back to 117K. But again, we'll see. Most likely, we're just going to chop around for coming hours. All right, so that's on the daily. Let's also hop on the weekly. Like one thing about the weekly is that it's showing a lot more conviction to me. Like the weekly is looking good. Like whenever, okay, short time frame, we are basically flooding ourselves, and especially go to Twitter, it certainly does not help. But if we zoom out, like Bitcoin always looks good if you zoom out and look at the bigger time frames, because we are heading to higher places. All right, so the reason why I'll say this, let me go ahead and remove that drawing. So the reason why I'll say this is that, okay, last week we have a candle, like a really nice looking candle. We pushed from 112 all the way to 123. We closed at 123, but we wicks to 126, something like that. That's exactly on 6th of October. So that's really interesting because people say that we're going to have a cycle top on 6th of October. So are we heading to higher places or not? Like, have we seen a cycle top? Well, that's one thing we try to figure out. And one metric I like to look at. Okay, I'm gonna go ahead and pull out the bull market support band and also the 50-week moving average, because those two are my favorite indicators so far. So Bitcoin, even though we are correcting right now, we are still okay. So here is the bull market support band, and we are at 121K. So Bitcoin still need to basically dip another 6%, at least 6%, just to reach the bull market support band. Or if it comes to 50-week, there is 16% room. There is so much room. And what this shows that is Bitcoin is still in control. Bitcoin is doing well. So this is one reason I think that on a longer time frame, there's still more room to grow. And if we zoom even more out, let's now look at the 200-week moving average, because this is another indicator that I love using. Whenever Bitcoin goes through a prolonged bear market, Bitcoin loves to go back to the 200-week moving average. So the red line here at the bottom. So one metric that I love using is how further we go from the 200-week moving average. So there are different tiers, different bars. So on the first bar, this is 50% away from the 200-week moving average. So if we are essentially trading within this region, this first tier, basically, that means Bitcoin is that cheap. For the second tier, that will be 100%. So that means Bitcoin is still cheap, but of course, it's relatively cheap. You can still get in. And that region is basically between 80K to 108K. So that's the second tier. And the third tier, which we are at right now, that means, Bitcoin might be getting a little bit expensive, because we are at the 150%. We grew 150% away from 200-week moving average. So right now, Bitcoin is trading at 121K. So essentially, we are in the mid-range of the third tier. So that means we still have so much room to grow. And then 200%, that means Bitcoin is getting expensive. So that will bring us to between 135K to 162K. If Bitcoin gets to around this level, this rectangle that I drew, then it's considered quite expensive, especially if you get to near the top of this this bar, then maybe it's a good idea to take a little bit of profit. Again, it depends on what you want. If you are a long-term investor, you have no problem holding Bitcoin for the next 2 years, even Bitcoin drop 50%, then go ahead. But some people, they have more a short-term trader mentality, and that's all right too. So I'm just telling you what I see on the charts, and you guys can do your own draw your own decision. So this on the weekly, this is another reason why I think there's still room for Bitcoin to grow, despite everyone is saying that 6th of October is already the cycle top. So this is for the TA perspective. I'm also going to build my case with on-chain analysis. So the first indicator that we're going to look at is the investor tool. So this is a very simple metric, but one that investors have to keep an eye on over the years, because it plots out Bitcoin's 2-year simple moving average. So the red line here against the 2-year simple moving average multiply by 5. So the green line on top. So historically speaking, Bitcoin has broken through the green line. So the top line, we drew the round, the circles here. So you could see, that was back in 2021, and here, just before we enter 2018. So during the last cycle, it found that like this level to be resistance during the first peak, because we didn't technically go over the green line, right? So it's important to note diminishing returns of this metric, as price was like crushing through the green line in early cycles and barely reaching it last cycle. So currently the green line is sitting at 385,000, assuming a similar price pattern where price does not hit this level and falls even shorter than last cycle's top, we can still project a cycle top much higher than the current all-time high of 126K. Basically, there's still a lot of room using this metric, and this is just like one on-chain we are looking at. Let's also hop onto the Pi cycle top indicator. So this is an indicator that is so popular, but it's also like a little bit controversial because people are saying that the 4-year cycle is no longer intact, so stuff like that. But like what this cycle does is that, again, it is a Bitcoin market metric designed to identify cycle tops with high accuracy using 2 simple moving averages. So the first one is 111-day simple moving average. And then the second one is the 350-day moving average, simple moving average, times 2. And this basically is like a cycle top. This cycle top signal is triggered when the 111-day simple moving average like cross above the 350-day simple moving average times 2. So that's when it happened, again, like aligned with the investor tool that we had. So we crossed here. That was back in 2021. So that's just before we enter 2018. So the Pi cycle top signals has worked effectively at signaling the Bitcoin bull cycle tops in the past. These moving averages have crossed within a few days of the actual top in the past, making it one of the simplest yet effective cycle top indicator out there. It does not work for bottoms though. And one important caveat must be mentioned, like all metrics fail, some are useful. It might not repeat again because people are saying that 4-year cycle is no longer intact, but it is simply data we couldn't ignore due to its historical accuracy. So with the Pi cycle top indicator like signal, we are quite far away currently. This suggests that the big move of this cycle has not happened yet. And even though, okay, when it comes to the 4-year cycle, I'm a believer, but there are different ways of calculating the cycle top. I talk about that in previous live streams. So if you guys want a deeper dive, I'll recommend you to go back to Roxham TV and watch some of the deep dive. So there are essentially like different ways. The reason why people are saying that exactly on 6th of October, we're going to see a cycle top is that they are using the cycle bottom to the cycle top, and that roughly would get like 1,064 days. That's how they get the 6th of October. But there are different ways of calculating it. Like if you take the cycle tops to cycle tops, then we'll get like different days. So myself, I'm more aligned that we might get a cycle top in, okay, I think we're going to get a cycle top in Q4 this year. So maybe in November, in December, if it's still aligned. So that's my guess. But anyways, like I do not think that the cycle top has happened, and I definitely do not think that a cycle top happened on 6th of October. So that's the Pi cycle top indicator. Let's also hop onto another indicator, on-chain metrics. So this one is the sell-side risk ratio. So it looks at total dollars gained or lost from these moves each day and compares it to the overall cost basis of all Bitcoins in existence, like called the realized cap. Basically, the average price everyone paid for the Bitcoin multiplied by total supply. So how do you read this, right? So higher values suggest heightened sell side activity, which is atypical of late stage bull markets or capitulation events. Lower values indicate quieter periods, maybe accumulation or consolidation. So this metric helps quantify overall market risk from sellers. And what we are seeing here from this like on-chain metric, so at historically muted or neutral levels, like far from the high liquidity orange line. So the orange line we are seeing here. And even further away from the extreme liquidity red line, which is the top line we see in here, because right now we're just here. You see the yellow circle that we did and how far we are from the orange line and also from the red line. So this suggests that despite making a sharp like 16K move up to new all-time highs, profit taking is still relatively low. This is atypical of bull cycle tops. So further suggesting that another big move is on the horizon, or that this cycle is completely different from the past and will end with a muted top. The probabilities kind of like favor the former, in my opinion. All right, let me know in the live chat if you agree with that. All right, so that's for the on-chain analysis. As I promised you guys in the beginning of the show, we're going to dive deeper into macro because we haven't done a deep dive on the macro for over a week. And the reason why I want to bring it up today, because like we have news about New Zealand cutting rates and stuff. Basically, like a lot of central banks, like a lot of countries, not just the US, are cutting rates. So why they're doing that? Because like since the pandemic, global economies have faced slowing growth, trade disruptions, and lingering inflation risks. So by 2025, inflation has eased in most regions, in most countries. So that further allows central banks to shift back toward monetary easing. The US, of course, they have cut like 25 basis points in September. Not a panic move, but more like a cautious support as growth kind of slows down. At the moment, people are pricing in there will be another 25 basis point cut on exactly 29th of October, and then another 25 basis point cut on 10th of December. So basically, people say that there will be a total of 50 basis point cut in the coming 2 months. So that's just the US. Like, let's also, well, okay, before we hop on to the news of New Zealand, because they are cutting even more rates. So they're kind of like more aggressive than the US. I kind of saw some confusion on Twitter. So I kind of want to address that before we getting into New Zealand. Because like people kind of get confused between rate cuts and also liquidity injections. They are two different concepts. So cutting rates, that means borrowing costs become cheaper. So it stimulates consumption, it stimulates investment, while injecting liquidity, that's QE. That means like the direct money flow into the system to prevent freezes or credit crunches. So those are two different concepts. So in 2025, like this year, like rate cuts dominate in developed markets, while like targeted liquidity boosts are happening in some parts of the world. For example, China. We're going to get into China in a bit. But for now, let's look at New Zealand because they did a surprise rate cut, like a 50 basis point cut. Like, is this a red flag? People were a little bit concerned. And this is why I dove deeper and researched a little bit more about New Zealand, the country. So basically, New Zealand, they have a population of like 5 million people, and when it comes to GDP, is 260 billion. So it's like well below Australia. Like when we Google New Zealand, people like to draw ties with Australia because like there are a lot of similarities and they are so close to each other. So these countries, so for New Zealand, I kind of like, I was curious where the GDP is coming from. So I searched that and guess what I found? The country heavily relied on like exports, tourism, and dairy like commodities. So like agricultural, like the export of agricultural products like dairy, meat, and fruit is a major source of foreign revenue and a significant part of the GDP. And then the second one is tourism, and then we have the exports. So both exports and imports make up a considerable portion of New Zealand's economic activity. So these key drivers of the GDP, they are all very vulnerable to global shocks. In other words, like maybe New Zealand is in deeper distress than we thought. Like unlike the US, they can do soft lending. Like in New Zealand right now, they are facing like GDP contraction, like slowing down. And then they have actually really high unemployment rate. Like unemployment rate is really taking up for New Zealand. So like it doesn't take a genius that is on a uptrend. Like if this is some shitcoin chart, I'll be extremely happy. But unfortunately, this is the unemployment rate in New Zealand. So Q2, they're sitting at 5.2%. So New Zealand's unemployment rate edged to 5.2% in June quarter of 2025, slightly above the previous quarters of 5.1%. The number of unemployment individuals rose to 158,000, up from 156,000 in March, marking an annual increase of 16,000 people or 11%. So that's a big jump. Meanwhile, the seasonal adjusted labor force participation rate dipped to 70.5% from 70.7% in the previous quarter, indicating a slight contraction in workforce engagement. All right, so in other words, the GDP is slowing down in New Zealand, so as the unemployment rate is ticking up, and the household debt is quite serious, like is more than 160% of disposable income, so that's pretty high. And they also have a like net migration, like outflow of talent. So everything kind of like forced New Zealand to cut rates. And when it comes to the inflation, like just like the rest of the world, New Zealand was suffering like a uptick of inflation that was like between 2021 to 2022, it reached to a high of 7.3%. But right now, like is in control, though it's ticking up a little bit. But like basically the New Zealand central bank have to come in and they have to decide whether to save the labor market, the entire GDP, the economy, or a little bit of inflation, because like 2.7%, okay, is still above the 2% target, but it's like it makes sense for them to cut rates aggressively, like faster at a much greater rate compared to the US. All right, so that's for New Zealand. And I think, okay, it's not only New Zealand's cutting rate, like Canada has been doing that, like EU or UK, they have been doing that. So there are a lot more cheaper money entering the market. So this is just the rate cut side of things. We still haven't get into the QE. US still hasn't started with the QE. So that's why I think the best time for Bitcoin is still ahead of us. We still haven't seen and like a cycle top, like a new all-time high for Bitcoin. All right, so that's for rate cuts. Let's also get into the QE because like China has actually started QE, though targeted. The reason why China has to kind of do that sooner than the rest of the world is that, look at this. While the rest of the world is talking about inflation, China is actually suffering from deflation. So that's interesting. So in August, there is a deflation of 0.4%, and then previous level was 0%, and then 0.1% inflation. Basically, starting from February to May this year, there are like 4 consecutive months of deflation. This is a nightmare for economists. Like for deflation, that means my money today gonna worth more than yesterday. So people basically don't want to spend because I know if I just like hold my money, like tomorrow or the day after, gonna be worth higher. So why would they spend, right? So what China is suffering right now is deflation, and also they have really high debt, like including local government liabilities. And when it comes to the property, like China property suffered the most. Like you'll see headlines like this, like ghost cities where no one wants to live. So this is like in everywhere in China. So like this, like China has around 65 million empty residential units, enough to house France's entire population. And then massive construction projects created entire cities that remain largely uninhabited. So property sector, they are in a major crisis in China. And compared to EU or UK, like China outpaced them on growth and unemployment, but like faces deeper issue when it comes to deflation. Because again, like economists don't like deflation. That's why China have a mix when it comes to the policy. It's not like outright QE, because I feel like these kind of topics, these kind of headlines, a little bit confusing. Like when I say China hasn't actually started a full-scale QE, I meant no massive or open-ended asset purchases like the Fed or the BOJ did after 2008 or during COVID. Instead, like China's central bank used targeted easing tools. So they lower rates, of course, like lowering how much cash banks must keep in reserves, and then interest rate cuts on lending. They have targeted liquidity injections for banks, for property, of course, like property is in distress, and also in stock market. This is sometimes called the appropriately loose policy, designed to stabilize growth without flooding the financial system. So this actually works for China because, QE is broad money creation. It prints money into the system. But when it comes to our cuts, so the cash banks cut and also the credit easing, they are a lot more narrow. They are like opening a valve on existing reserves, but not pouring in new water, if that makes sense. So China preferred this because, deflation and overcapacity risk. So QE could fuel bubbles in stocks and property. And another reason, because China, they have really high debt, like 300% of GDP. So like it makes like uncontrolled balance sheet growth more dangerous. So that's why China is choosing this approach instead. But why this is important for Bitcoin? Like at the end of the day, we care about our bags, right? We care about altcoins, we care about Bitcoin, where they're going. All right, so lower rates or like cheaper to borrow money or direct QE, they all equals to more liquidity. Like money flows away from bonds or cash into risk on assets. So like liquidity injection, of course, like it weaken the fiat dollars, the fiat currency, and like boost demand for scarce assets like BTC, like gold, because gold is like scarce, right? So that's why gold keeps breaking new all-time high. So as silver, and historical example is that for Fed 2020 easing cycle, it fueled BTC run from 10K all the way to 60K. So the 2025 outlook, I will say there's like renewed Fed cut, and New Zealand, they have the shock therapy and China stimulus. And it's not just like these three countries alone. Like the rest of the world, they kind of have to cut rates. They kind of have to boost the economy because we know the world leader is still the US, and a lot of these countries are basically trading with the US. So if like US is cutting rate, that means the local currency, like maybe Canada, because Canada trade a lot with the US. So if the US is cutting rate and China and Canada doesn't, that means the Canadian dollar is going to get stronger, and they don't want that because that will make the exports more expensive. So why I'm saying that when US cut rates, all these countries got to follow, otherwise they'll lag behind. And when they follow, that means more liquidity entering the market. So that's why I think like all-time high, we still haven't seen an actual all-time high. And this is a graph that basically pull the global M2 supply with the Bitcoin price. So you can see that mostly, like if you zoom out, there is a lag though. So usually global liquidity would move fast. Bitcoin would lag maybe like 2 to 3 months. But in general term, like if you zoom out, you can see that they have like a quite heavily correlated. And right now, Bitcoin is still quite undervalued against the global M2 liquidity. So I think the best is still ahead of us. All right, so that's for macro. I was talking a little bit more about macro because I haven't done so in more than a week. So I hope you guys found that part valuable. But next, I kind of want to dive into the next segment, which is geopolitics. I don't talk about geopolitics a lot, but this is interesting because it just happened. It just happened yesterday. So there was a peace talk in Egypt. So it reached a big step forward. So yesterday, just a few hours ago, so Israel government approved the first stage of the US broker deal. So both Israel and Hamas agreed and confirmed by President Trump ceasefires within 24 hours. So the Israel troops will pull back. But however, as I mentioned in the beginning of the show, if you scroll down, those are the latest updates. And there's like a breaking news. If you scroll here. So 2 hours ago, like Israel military carried out more attacks near a city in Gaza. So yeah, I mean, there is a big step forward, but Israel kind of like ignore the US. So Israel violates the ceasefire in Gaza. Israel attack helicopters and artillery, bombing areas east of Gaza City. So stuff like that. But like anyways, I kind of want to dive deeper into the ceasefire. Like this is a ceasefire only, not a full peace, because this has been proven literally just 2 hours ago. So what's still open? Like what are the key issues that we need to solve? So, okay, Hamas need to give up the weapons. And also they need to solve the, like, who will run Gaza in the future. And they're hoping that the Israel troop would withdraw. So people are saying like this stops fighting maybe for now, but looking like it's not even for now. Like, okay, the latest story is that Israel stopped troops, like start pulling back after that they bombed 2 hours ago. But again, like these things move so fast, and there are latest updates like every roughly half an hour. There are still long-term challenges like finalizing prisoner list and also the question of Palestinian statehood or rebuilding Gaza while avoiding new violence. But there are still good news, okay? There's a ceasefire, and both parties, they all get really tired, like 2 years of fighting. That's like war fatigue. And based on some numbers, there are more than 42,000 Palestinians got killed, though the number a little bit controversial, but like that's the official number, right? So more than 42,000 being killed. Donald Trump was like pushing hard, like he has been working with Qatar, with Egypt, with Turkey, and want to seen as a peacemaker. And there is like so much global pressure from the Gulf states as well, like from different, not just Gulf states, but like basically from the West especially. So timing wise, it makes sense for this ceasefire because it has been 2 years. So 2-year anniversary of like 7th of October back in 2023 when the Hamas attack happened. All right, so there are deals. Okay, there are still terms to be discussed. For example, hostages, because Hamas they have to swap like maybe 20, I think like 20 living Israel, and then they have to swap some bodies, and then Israel have to do the same. They have to release like 2,000 Palestinian prisoners, and yeah, so U.S. have to guarantee that the war is over. That assurance to Hamas, and there's like troops monitoring. So this doesn't matter for Bitcoin because, okay, ceasefire, of course, is good news. The last thing I want is there is another war. Actually, like Donald Trump has stopped quite a lot of wars ever since he was the president of the United States, like India and also like Thailand and Cambodia, stuff like that. So I'd like to see some more developments. That would be great because I hate another person get killed. But anyways, like since this is a Bitcoin channel, let's talk about the impact for Bitcoin. Like, okay, we know that we have a ceasefire coming. Looks like there's moving forward, but it's not certain for now. Okay, so if there's like a confirmed ceasefire, we know the oil price is going to drop maybe like 1% to like $61 per barrel. Lower oil price, that means like less inflation, more room for Fed to cut more rates. And of course, that is bullish for Bitcoin. And if truth fails, like oil price going to spike up, would maybe delay the cuts and maybe pressure a little bit of like crypto's price. And for Donald Trump, like he's positioning himself as the deal maker, like, and he has like a deep tie with pro crypto policies, like ETFs or Bitcoin reserves or lighter regulation. So this would definitely be good for the entire crypto market. And they have already like a bet for poly market, like over $1.5 million stake on ceasefire outcomes, like showing how crypto ties into geopolitical events. And of course, like Bitcoin is becoming a macro asset, is becoming the digital gold. So all I'm saying is that I'm watching this development very closely because like every half an hour, okay, this is like 8 minutes ago. So every few minutes, basically, we get new updates about this. Like hopefully the ceasefire could actually happen and hopefully wars could end. All right, so that's for geopolitics. Let's also move on to some like native Bitcoin or crypto news. So Coinbase launches DEX trading in the US. What happened is that, okay, they have DEX trading right inside the main app of Coinbase for US users, except New York. So that's very interesting. This lets people trade millions of tokens on-chain, especially on Base. So if you don't know, like, of course, Coinbase have a Ethereum layer 2, which is the Base network. So right after they launch, no need to wait for centralized listing. Users can just swap using the existing Coinbase balance. So no separate wallet needed. Of course, going to be extremely fast, like lower fees, real-time token discovery, and they have like a built-in scam checks. This is part of Coinbase plan to basically blend centralized and DeFi together, since DEX trading has exploded in 2025 and we have seen Hyperliquid, right? Like that is one of the very successful DEX, though okay, they have a different nature, they focus on perpetual, but like point being, people love DeFi, people love DEXs, and I do expect that the line between CeFi, centralized exchanges, and also DeFi gonna get more blurry. And right after this news, of course, like Coinbase rose like 2 to 3% because of this news. And this is like, I would say a game changer, especially for meme coins on the Base network and also like new DeFi tokens on the Base network. There is the interface. So this person is trying to swap to some meme coins. So that's how it looks like if you go to the Coinbase app. It's like a built-in feature that they have. So this is not the this is the first Coinbase DEX, like first time DEX trading is built into Coinbase main app. Before that, like users had to use Coinbase wallet or wait for a token to list on the exchange. Now swaps are native inside the main Coinbase app. So it's hybrid mode. You could it's centralized ease and also decentralized speed. So that's great thing. That's a great thing. That's really bullish. Which DEX they added? Like they didn't just add Uniswap or another single DEX. Like instead, it builds its own front end on Base, like pooling liquidity from different protocols, maybe from Uniswap, maybe from Aerodrome, etc. In short, you are trading on Base through Coinbase app. And they are planning to expand to other chains like Solana very soon. So that's great. Because like, okay, if you guys have been watching Jam Crypto, because I've talked about Coinbase even during the bear market. I have been holding Coinbase for like 2 years. So I'm really happy as a Coinbase holder. And as you know, just like a few months ago, like a month ago, 2 months ago, they entered the S&P 500. So I'm very bullish on Coinbase even until now, because like, okay, Coinbase has more than 120 million verified users worldwide, and around half of that is from the US. But okay, point being, they're about like 8 to 10 million monthly active users. Like if just 10 or 20% of the US users try this DEX, that's like 5 to 15 million people onboarded in like 1 year alone. So the key drivers are no new wallet needed. There's hype around Base tokens and meme coins, because like we saw that last year or 2 years ago. People were so hyped about Base meme coins. I was trading it a little bit as well, but of course, like meme coins, it comes with a very high risk. So just make sure what you get into, just treat it as a lottery ticket. So that's all. This, I will say, is a direct promotion for the Base network. Traders go through Base, basically boosting its entire liquidity, TVL, and adoption. So that's extremely smart. And if you go to DeFi Llama, you would know that, okay, Base is already sitting at number 6 in terms of TVL. First one is still Ethereum, second Solana, and then BSC, Bitcoin. That's interesting. So Bitcoin, Tron, and then the 6th one is Base. So Base is actually the largest L2 by TVL so far. So I see a lot of potential in Base. Maybe it's time to buy some Base meme coins. Yeah, but like just be sure what you get into. Sometimes I like to gamble just for fun, but I know that there's no utilities, and long-term wise, Bitcoin is still the king. But I do like to allocate a little bit of portion of that money just to gamble for fun. Okay. And as for Coinbase, I do think there will be more RWAs emerging from the app. So Coinbase and Base already support like tokenized treasury, so BlackRock's Biddle Fund. So do expect more assets, maybe real estate or bonds or funds to show up on Base and come in the near future. As for like Coinbase stock on Base, like they don't have it directly. They have like tokenized synthetic coin, like so Coinbase stock could appear in DeFi, but like SEC rules block real shares from trading on chain. Hopefully, I do think this would happen maybe in the coming years, but yeah, one day it will happen. It's not if it will happen, just like a matter of when. So I'm still very bullish on Coinbase stock, like medium term, and Coinbase revenue for 2025, it was like so strong, like a $6.7 billion. So adding DEX like this, I think is a great idea, like more trade, more fees, so higher user retention, and maybe we could see like a 20 to 30% upside if crypto rallies. As for New York, they're still banned in New York, so that's interesting because New York requires a bit license for crypto businesses. Coinbase has one, but this new DEX feature likely needs more approvals. And New York is known for tough rules like mining bans and high compliance costs because it's a state controlled by the left, so it's really stupid. But still, over 30 firms are licensed there, so it's not like entirely anti-crypto, and it's hard to be like entirely anti-crypto for now because we know that Bitcoin is here to stay. So once approved, like Coinbase may extend this feature to New York users as well. But like at the moment, like New York users might just have to wait. All right. So that's the news sector I want to cover. Like, of course, the key takeaway is that like this will give users faster access to new tokens and lower fees, and also is a huge promotion, like a big shielding, a big shield for Base based on network, Coinbase Ethereum layer 2. So that's good stuff. All right, so we are running out of time, but like last call to action, make sure to follow me on Twitter because like I have a lot of updates, and the quickest way for me to reach out to my community is of course via Twitter. So make sure to follow me. My handle is gemcrypto_io. And yeah, I see the live chat is really active. It's like Anita Chu, like I haven't seen you in a while, so welcome back. And Bam Bam Crypto, of course. So yeah, thanks for commenting in the live chat. And if you guys are watching the replay, I really appreciate you guys, or maybe comment below. I really appreciate it. So my Twitter, gemcrypto_io, but make sure to also follow Roxham TV, because if you guys want like latest updates about Bitcoin, about geopolitics, about the market as a whole. So it's a great place to get valuable content. So make sure to follow Roxham TV. Anyways, it's Friday, so I hope you guys have good plans for the weekend. I'm heading out right now, like when I finish this live stream, because I have another birthday celebration. And I know, like I've been celebrating my birthday for a lot of days, like since I enter October, like yeah, that's another reason for me to be bullish on Bitcoin, because it's my birth month. But okay, I'm gonna head out right now. So thank you guys for watching. I will see you guys on Monday. So my show is Monday to Friday, 4 a.m. Eastern time. So thank you so much for your support, and I will see you soon.